So what's the
Gather
next
around,
album?
young ones.
What's the next album?
The next one is Fleetwood Mac Rumors, and which has just started, which is great. So
Okay.
I know what that's going to be like. I'm just interested to see how, because it's going to try to create an arc for me to. So
Got it.
it's supposed
Okay,
to be laid
well,
back beginning and then more
so
energetic.
you'll climax at Van Halen or Metallica or something like that.
Well, not
Led
my word
Zeppelin.
choice, but okay.
Okay. All right, let's get
I'll
the
just
show on
say
the
it's
road.
going to be.
Welcome to Wall Street Beats. I'm Steve Lamar, joined by David Maris and Benjamin Bry. Today is November 18th, Tuesday. Everybody's walking on eggshells around the NVIDIA print, and we got a lot of economic data coming out later in the week, Ben. We got Fed minutes tomorrow as well. It's going to be an exciting end of the week. What do you think of this sell-off, and is it going to continue? And for how long? What do you think, Ben?
I think it's a weird time. Honestly, if I had to
Take your
totally
chips and go
call it-
home if you're up 15-20% this year?
Yes, actually, that's where I was gonna go. I was gonna say I think there's a lot of guys who are just calling it for the year. I think
Yeah.
it's like you don't know how to handicap this weird data gap. You know, this administration. It's clear there's deleveraging going on.
The government
Yeah, I
was
just
shut
don't-
down for almost 6 weeks. That
Yeah,
can't be
like
good.
you know, honestly, it's been a great rally since April, where it was really looking like an ugly year. And if you clawed back and you're having a decent year, like why even mess around? Is what I probably the best. I mean, to be honest, even I've been taking some of these shorts down. I mean, if you remember, when was it? I think October 16th, I got back in the bubble shorting game, and like it's been quite a month for all that stuff.
Right.
And this morning covered some IWM that we shorted at 245.
So even the guys who are
That
short
are finally
should take the
working
chips.
a little bit are the big banks. They've been the most annoying short, and then the Fez, which is the Euro Stocks 50. Like those have both been the absolute worst, boring shorts that just have not worked, and those both are coming in.
Yeah.
I don't have the chart with me, but I tweeted it if you want to check on my Twitter. And in the February period, January, February, everyone's talking about the BDCs and the private equity guys trading poorly, and the money center banks, as Charlie's talked about, and he's short as well, and he's been annoyed as well, have just held up. And I think if you want a direction for the market, watch those banks. Those banks they've had a nice little sharp move off that blow off top. Goldman, JP, Citi, Wells. If they roll from here, I think the direction of what's happening. You got the final thing. I was talking to Mackie yesterday. Well, Walmart's probably not going to say anything good, and Home Depot didn't this morning.
Home Depot is a disaster.
And then you got Nvidia. Who knows? And then
You
the
got
job
Target
data.
coming up. You got TJ Maxx. You got Williams-Sonoma from the retail side. I think that's tomorrow.
I think the year's over by Friday, to be honest.
Sounds like
Thursday's
Thursday's going to be a big day.
Stuff, but I think that that's the most important last final day of the data point. 36 hours of data that you'll have of the year. So anyway, yeah,
Okay.
That's kind of my thinking. It's a weird spot though, for sure.
What about any thoughts on Fed Day? I know it's like 3 weeks away, but
I'm long the Soakers.
impossible.
I mean,
Yeah. Okay.
I don't. They're having a nice day. The ADP showed negative job loss for the trailing 4 weeks, which is a little sequential improvement from the negative 12,000.
Yeah.
But I think everybody at this point knows the economy's weak. The biggest question is, let's get the governments reopened, send people their checks. Let's see how this thing looks in a couple weeks or the Q1. And so I think that's another.
See if we can
reason
get
why
a Santa Claus.
Yeah, like it's tough to say, hey, is this due to this, historic government shutdown? Is it due to the consumers really weak? Is it a combination of two? And ciphering or getting through the data. And honestly, earnings of consumer with all that stuff maybe don't even tell you as much as you want to know. So I think it's a tough time if you're data driven. Clearly deleveraging is going on. So
is it too late to buy protection on the major indices? Is it too late to buy some 2-3 month outputs? Premiums
depends on your expectation, I guess. I mean, like I think if you were to say, if your expectation is that this is gonna
continue,
we're gonna get a 10-15%, but let's just say the Qs are gonna go to 520, 540.
Yep.
Then no. If you're like, looking for 5%, I don't think there's much juice in that anymore. And
okay.
Yeah, it's weird because I think it's one of those times where it's like, it's probably still, the short's still fine, but because there's been a sharp move, it always is uncomfortable to hold a short, unlike longs where you're used to it working for a while. Shorts, just guys have gotten beat over the head for so long of like, you get paid for a little bit and then take your money and go back to your corner. You know what I mean? Like, so.
Well, I think this Bitcoin sell-off has kind of been a tell too, right? I mean, it's usually leading, and it's definitely led this time.
Yeah, I mean, but if you line it up versus a whole list of these, let me look at just give you a few names. Like I did this last night, but versus Oklo versus Rigatoni versus
That's
now Palantir versus Nvidia's even 15% off the top. So like all these things that have the most leverage or the most highest beta to leverage.
Yep.
There's just various degrees. Like CoreWeave, I shorted that at 145 and I covered at 103 before earnings because I respected the magnetar and I didn't want to get magnetarred. and I wish I went to because it's now $30 lower than it was. That was like a week ago.
Unbelievable. All right, well, so we're taking shorts and longs off and just gonna go enjoy our turkey and see what happens over the next couple of weeks. It sounds like that's Ben's plan.
I mean, I'm keeping some things on, but I don't know. It's a weird spot. I don't really feel like buying stocks all that much. Maybe Weight Watchers has gotten absolutely crushed. David, what's going on there? Have you seen anything there?
I don't know. I mean, I don't follow it closely, but maybe it's because of all the government deals. People are thinking, okay, the over-the-counter, or not over-the-counter, the direct-to-consumer with Lilly lowering price and Novo lowering price and the deals with Medicare, that fewer people will be cash pay going to a Weight Watchers. Weight Watchers obviously offer so much more, like much more hand holding, and you can get a whole variety of options rather than just Wegovy, or Zepbound. But that may be what's going on, is that people go look at the total addressable market is all of a sudden going to be all of Medicare that used to pay out of pocket will probably now just be Medicare, and so that may have changed I'd be interested in seeing if they're at a conference or if somebody can get a hold of them. What are they saying about what does this do to their business? Do you get what I'm saying? Do I make it clear?
Yeah, no, that totally. That's a logical. That's a logical off the top explanation. Because Hims is kind of trading the same way, right? I mean, it's been under pressure for.
Yeah, you look
weeks.
At it. It's. Yeah, I'm thrilled in a way. Obviously, I'm never happy that a stock goes down because people who own it, but I don't own it, so that
you
I'm
traded
thrilled
it well.
about. But I'm thrilled that we had told subscribers that this wasn't the time. In $50 and $60, they have some quarters ahead of them that are tough, and now you're in the mid 30s, and I'm not chasing it here. I wanted to talk about it today just to say, let it settle down. Let's see. This stock could be $50 just as easily as it could be $30. So, let it try to pick your places. And I said I wanted to be in the 30s, so we're here. But I'm not rushing to do anything because, like Ben and you've said, it's not really the market where you think things are going to turn you might get a pop, right, because it's a volatile stock, but it's
Right.
not as though the overall environment is changing. And then within weight loss, the market's changing a lot, and some of it's great for them, but part of it is that a lot of the Medicare patients that were paying out of pocket might not go to HIMSS now.
Right. Yeah, they got other options. Lots of other options. So, what else are you looking at this week, David? Anything jumping off the screen at you in this
Yeah,
in this sell-off?
yeah.
Your
some
stocks seem to
interesting
be
things,
holding up
like,
pretty well.
well, for the XLV, which Ben and I've talked about on a few different shows, is up today. So that's kind of showing its defensive nature, which is
Yep.
great. The XBI is down, which is not showing its defensive nature, but it's defensive. But most of those stocks, or a lot of those stocks, are pre-revenue. Some of them, the largest components aren't. But if there's not going to be a rate cut in December, the XBI might be pausing here, and I think there will be one. I think that, not as an economist, not as just someone who's watching things, I think we can talk about a lot of the weakness on or inflation type weakness, higher than expected inflation, can be attributed to tariffs, and we've seen the president already start to bring down some of the commodity tariffs. There are other levers, similar levers to other products that he can do. So I think that the inflation part isn't the part that the Fed should be looking at. I think it will be the unemployment part, which then you'll drive a higher likelihood of a rate cut. So the XBI might be safe. No one's playing that, right? Are you gonna bet on having the edge on what the Fed's going to do? I mean, someone might.
Yep.
It's had a great run, so people are just taking money off. I'm actually looking at a couple stocks. So one is Viking. I've been short it before, and I just finished a really big project on looking at how they've talked about partnering over the last several years. I'm going to put into the subscriber passes account, where you can buy this very detailed report. But the net of it all is, I think sizing it right, I think it's a good short. Sizing it right, because they could be taken out or they could do a partnering deal, is the tricky part. That's what's going to keep everyone from avoiding shorting it. But
Right.
I don't think that with the market price coming down for GLP-1s, with so many competitors, you just saw Pfizer win out in a competitive bidding contest with Novo Nordisk for a company. Well, do you think that the bankers and anyone involved in the business development departments were like, oh, I wasn't aware that Viking is out there. Let's bid against each other for this company. Oh, wait a second. There's another company that's involved in obesity, Viking Therapeutics, that's public
Right.
and very well known.
Right.
Oh,
Right.
we didn't. So what I'm trying to get at is,
It's in the
sometimes
banker's
you should
financial
look at the
interest to
logic of
get
it.
a deal done if there was some there.
Public, it's the value, and some of these deals are for private companies, which are more complex, harder to get done in some ways. So do I think that they've been passed over by the biggies? Absolutely. Again, it's a risk. This is a hot market, and someone might decide to pick them up. But if the other thing is, if you look at their balance sheet, this is like a top secret, not secret. For investors that are kind of casual investors, companies can't be under a year's worth of cash unless they get a going concern language in their 10Q or 10K. Viking is just about 5 quarters, 6 quarters away from being less than a year's worth of cash, which to me says offering. Maybe it's partnering and they bring in cash. There are other ways to bypass that, right? Bank
Right.
loans and the
Sure.
rest. Royalty financing. So I'm not saying it's definitely going to happen, but that's another risk that you have. I put all this into Grok after doing it with 3 other LLMs. I put it into Grok, and Grok said, "Oh, well, you shouldn't be worried. They just raised $1 billion." And so I frantically looked, how did I miss that? I looked at their website, and then they didn't. And so I asked Grok, hey, what happened here? And they're like, sorry, it was a daydream or something. They just said it was a mistake.
Wow.
So when Grok's even imagining that there's a financing, maybe I'm onto something.
Grok is imagining they've got
so
$1 billion.
I think
Okay.
Yeah. So I think it's a good short. I don't think it's a great short. It's not like a structural short. I mean, I think it might be, but it's not like Bausch and Lomb and Bausch Health, where I think those are zeros. This one is. I just don't think they can afford to do this on their own. So
when do they report next?
That's they just reported, so whatever,
They
3
did,
months
okay.
from now, and given it's gonna be the fourth quarter, it might even be like 4 months from now.
And
But
is
the
there
year
any,
end's
are there any
always when you have
catalyst
to-
any catalyst you see coming in our face here if we're short? We need to be.
I don't have
aware
that in
of it or
front
on
of
the
me right
calendar?
now since I'm in a. Yeah, I don't have that in front of me right now because I'm in
Okay.
a rest area. They always have data.
So it's in
and-
your report.
But the good, and the good part of it is that there's always competitor data too. So whatever data they have is going to be counteracted, I believe, by other competitor data.
Yep.
So
What do you think, Ben? Would you short this thing? Looking at the chart, looking at the liquidity, looking at the institutional holders. What do you think? Looking at the vol complex,
Let's see.
VKT. What is it? VKTX?
Yeah, VKTX.
VKTX. Yeah, you're probably better shorting a bank because it's much more liquid and you have the macro against you. But it's
I
to
mean,
me,
I
I
own
think
the
that this is.
XBI. I own the XBI and the XLV, as David and I have been in for a while. But yeah, no, I don't have any. I
You have
kind of
no-
stay away from biotech calls. Try to stay in my lane. I have a lot of lanes, but that is not one of them.
That ain't one of them. Shorting biotech.
Yeah,
is
that's
not one of
I
them.
will say. So, Steve, you bring up a really good point. For healthcare shorts, the best ones have been structural shorts that have already started to fall apart, like where earnings are starting to miss and they have tremendous amount of debt. The reason I say this isn't like great is I don't think they partner and I don't think they can afford to do it themselves. So that part of it's structural, but they don't have something pending and they haven't fallen apart. They've actually had okay data on some of their products. So the fact that they could find a partner wouldn't surprise me. Like if tomorrow they announced, okay, some Japanese company or Novo decided, okay, this is going to be, but as a long, I don't see it because there's so much money that has to go behind developing this. So
All right.
if I owned it, I would. If I owned it, I would sell it. And I'm going to be short it. So
All right.
just a little.
Okay. Ben, are we doing anything in front of NVIDIA? Applied move is 7%. Either way, what do you think? Just stay away.
You know, honestly, I'm kind of at the point, like, I'm watching the board right now, and some of these crap stocks just got bid, and then they're falling. It just seems very flimsy out there. Like, I was short. I shorted NVIDIA at 184, and then right in time for it to go to 210 or 211, which was fun. And then I covered it back at 182, and I said, you know what, I'm gonna wait and see.
Don't have the
like,
stomach for this.
remember the February? Look, if you're a bear, you remember the February situation where they printed, and that was when things got going. Could be like that. I'm kind of more in the camp of like, I'd rather short lower or short higher, like or buy higher even. Like
Right.
this is
Just
like
give
a
me the
weird
direction.
time.
Right.
And like for stuff like that can move a lot, you know, it's just tough to have an edge. I mean, look, the asymmetry is definitely to the lower, because I think that like the one thing that this fall has taught us is that the market's seen enough of this spending for, you know, to just line Jensen's pockets. You know, Amazon did a debt deal for $15 billion yesterday. Google did 17.5. Meta did 30. Oracle did 30. Meta did another deal in private credit for 30. Well, you know, billion here,
Yeah,
billion
they're
there.
stacking
next
up.
thing you know, you got $1 trillion, right?
Right.
And And so I think that when you look at that chart that I've used on here and posted to the group on our chat, is that you just see the free cash exploding in NVIDIA. So you question yourself, like, is that peak, right? Is that the peak cash flow? Because it's still not that cheap. I mean, I think 150 billion next 12 months, which is unbelievable that they're going to do 150 billion in free cash flow. I didn't think I'd ever see that in my lifetime.
Right.
But still, 4.5 trillion now. So three,
Yeah.
it's still,
A lot of good news is priced in, for sure.
Yeah, like if that was at like a 6%, 5% free cash flow, you can understand it. But I don't know. It seemed rich for me.
And if
30
deleveraging, if this
free
really
cash
is a
flow.
deleveraging, you would think this would be the first thing. If they don't just crush it, this is the first thing you're going to start taking off your page, right? No?
I would think so.
It's so heavily owned.
Look, I think that the trade was clearly, hey, short CoreWeave, short the guys who are part of the trade, who are the lesser players. If you're like thinking like this debt-fueled capex may slow, or the market may put the governor on the brakes on them, and so I just, without getting too deep into NVIDIA, I just think that trade is kind of where the market went with it.
Got it.
And I think that you got to start being more and more in touch with what numbers are and what you're looking at, because now that like the infinite bid and what would they call that, the infinite money glitch, where you just announce a deal and stock go up, now that those days are behind us, hopefully. Basically you might be more fend for yourself, so there could be dispersion and long short trades, pair trades within it. Like, I think it's more interesting from stock picking rather than just the orgy that we saw from April earnings till, call it October,
2 weeks ago,
mid-October.
3 weeks ago. Yep.
Yeah, October 25th, something like that.
All right, let's wrap it up. David, anything you want to close with? Any follow-up thoughts?
Well, two things. One
Okay.
is we are two things. First, we're obligated to mention our sponsor, Einstein Bars. So you can get them somewhere. I don't know where. Steve, you could tell me where
you
can
can get them on our website and on Amazon.
Okay.
Einstein.
So what is the website?
Einstein.energy is the website.
Einstein.energy.
Thank you for the plug.
One of our
sponsors.
Sponsor. We're
One of our
obligated to say it. Yeah. So we're obligated to say it. So go to Einstein.energy. I had one this morning. As you can tell, I have tons of energy, so there we go.
We can tell.
I don't know if it made me smarter. It's supposed to make you a little smarter or cognitively a little better. I don't know if it did, but I'll leave that.
It clears your head for sure. It does.
Yeah.
And it's got the
Lion's
same amount of
mane
caffeine as a
mushroom
Coke.
extract.
So it'll definitely give you a little bump. Good morning, pick me up,
There we
or good
go.
afternoon, pick me up. All right, what was number 2?
Number 2, we also are obligated to say go to wallstreetbeats.com or passes.com/wallstreetbeats if you want to hear more or even better commentary. If you thought this was only okay and you're looking for better, you can get the other contributors as well.
Might be tomorrow with Mackie and Byrne. I don't know who else is on, but yeah, with Marcin.
Yeah.
All right, and then where's your report on Viking? That's on Passes?
Well, I just uploaded it last night, and I'm going to try. I need to talk to the website to see if I can get. What I'd like to do is 2-tiered pricing: one for individual investors, and then others for VCs and institutional. Because
They like to
I
share.
do want people to read it, and
Yep.
making it $1,000 is difficult for individuals to see. I'd like them to see, also, even if they're not interested in Viking, just to see, okay, this is what you can do with AI to kind of data mine things.
Cool. All right. All right, we'll
later
keep an eye
today
out.
when I get
We'll,
to Arista.
how will we know it's out? We'll put a tweet out when it's available, yeah?
Well, yeah, absolutely.
Okay. All right, sounds good. All right, everybody. Thanks for joining us. Thank you, David. Thank you, Benjamin. Follow us on wallstreetbeats.com and on passes.com/wallstreetbeats. We will see you back here tomorrow. Have a great week.